right, we will go ahead and get started. My name is Scott Raspa, and I am the Director of Growth here at Hydrogen. And today's webinar is titled, What is Facebook's Libra and How Will It Impact Digital Money? This will be presented by our very own Mike Kane, co-founder of Hydrogen. And I'm going to let Mike introduce himself in just a moment. Before we begin, I have a few things I just want to cover. First, everybody on the call, except for myself and Mike, are muted. But if you do have questions throughout the presentation, feel free to type them into the Q&A button within your Zoom pop-up window, or there is also a chat button. Feel free to type them in there, and we will address any questions at the end of the presentation. If for some reason we can't get to all of the questions, we'll certainly follow up with you individually to address them. And then also, we will be recording this webinar and we'll post it to our website within the next few days. Once we do, we'll send you an email with a link to the recording. So without further ado, I'm going to turn it over to you, Mike.
Thanks, Scott. Thanks so much to everyone for joining as well. I wanted to welcome you to today's webinar. I'm really psyched to talk about this topic because it's always fun to look at new topics in fintech, especially since this has been so much in the news. So today we'll be discussing, which is something that's really been hot the last few weeks, which has been the new Libra digital currency that Facebook announced, and that David Marcus, who joined Facebook from PayPal, is now leading there. And they intend to launch this product in 2020. So before I go into detail about Libra, for those of you who don't know me, I'll give you some brief background on Hydrogen. So I'm one of the co-founders. You'll see me here on the slide. That's actually my twin brother, Matt, who's also listening in. We're a New York City-based financial technology platform. Really what we try to do is what we call accelerate innovation for enterprises. So we have a suite of APIs and libraries, and we'll talk a bit about our new molecule suite of libraries and how it's different than something like Libra that we expose to third parties like enterprises around the globe. And that includes financial engineering and UX, front to back infrastructure to build some really cool financial applications. So let's talk a little bit about Libra. And as you probably know, this has been a very controversial subject in the last month or two. So within weeks of Libra's announcement, there's pretty much a full-fledged scandal on Capitol Hill. And these are some two popular memes that I found about Mark Zuckerberg, which are humorous, but at the same time, pretty accurate if you ask a lot of privacy experts in the space. So if you look at the public's perception of Facebook and why this had such a firestorm on Capitol Hill, there was a Harris poll, and they do this every year, of corporate reputation rankings. And Facebook, out of 100 companies, actually was ranked 94th. So you might be curious who were the 6 below though, and that included companies like Sears, who's now bankrupt, Philip Morris, and the US government comes at number 100 on that list. It's even worse that Goldman Sachs and Spirit Airlines managed to outrank them. So there's not only a perception among lawmakers, but among the public that when Facebook launches something, there might be something afoul. But they had a legitimate response. They've said, and we'll talk about in a minute, that when Libra launches, Facebook and its affiliates, and there's about 29 to 30 affiliates now in this Libra Foundation that they created, will have the same rights and the same obligations and privileges. So what that means is that Facebook will have 1 of 100 seats when this foundation is at its full capacity. So what they are implying is that they'll essentially have 1% control over Libra. And this has been their rebuttal. But remember that you are the product with Facebook, and they've said this many times, and data is what they're after. So hence there's a fair amount of skepticism from a bipartisan group of lawmakers. This is actually the second attempt from Facebook at something like a digital currency. Many people don't remember that in 2010, when millions, and maybe some on the line, were purchasing tomatoes for their imaginary farms on Facebook, they launched something called Facebook Credits. And these were actually gift cards. You can see an example here that you could purchase at something like the pharmacy or at Walmart. And it enabled people to purchase items and games and also non-gaming applications on the Facebook platform. In this case, this was 9 years ago, they came up with the equation that $1 was the equivalent of 10 Facebook credits. And you'll see how this is similar to what they're trying to do with the Facebook Libra. They were available in 15 currencies, including dollars and the pound and euros. And they had over 150 developers that offered credits with 650 Facebook games. And that was about 70% of all goods purchased on Facebook at that time. But within 3 years, Facebook actually deadpooled this project because there really wasn't a good reason to buy the credits. At that time, 75% of their users didn't even play games, and there's no network effect created. So essentially, these credits existed in a vacuum. So really the question now is, will Facebook make the same mistake twice? And have they learned from this first attempt at making a digital currency? The actual Libra ecosystem is broken down into 3 parts, and we'll explain this in a bit more detail throughout this webinar. The first is this blockchain that they've created, which in their words is secure, scalable, and reliable. And it's governed by what they call an independent Libra association, which is a Swiss-based foundation that we'll talk about. Number 2, it's backed by a reserve of assets that's designed to give it intrinsic value. And this is what they call low volatility cryptocurrency, which many people now call stablecoin. And number 3, they've actually created or are in the process of creating a new programming language for secure smart contract development, which would be similar to Solidity and other programming languages that have been introduced in the last few years. So to become a member of this exclusive group, I call it the $1 billion Club, because they've actually created a Swiss foundation. There's a $10 million minimum buy-in, meaning some of these companies have put in more capital than that. They expect 100 members at full capacity in this organization. Right now, there's approximately 30. But unlike Ethereum and Bitcoin, this is important to remember, only these foundation members, so for example, MasterCard or Visa or Lyft or Uber, will be allowed to run a node. So there'll be 100 nodes at full capacity here on Libra. On something like Ethereum, there's currently, I looked this morning, over 7,800 nodes, and hydrogen would be one of them. So essentially that's 80 times approximately more decentralized than Libra. In addition, the members will also maintain the supply of Libra in response to demand, meaning they'll issue new Libra as needed, and they'll also destroy or burn the Libra when people redeem them. So the members are required to support a reserve fund to keep the value of the currency stable. And each unit of Libra will be backed one-to-one in a basket of currencies such as dollars and pounds and euros. So this is very similar to what they're building with credits, but they've made it a bit more sophisticated this time. And they've also stated that the ambition is for the Libra network to become permissionless, meaning within 5 years, they've stated in some footnotes in their documentation that they'll allow the public potentially to launch more nodes on top of the ecosystem. But they really haven't put out a viable plan yet on how they'll do that. So that's very much a gray area right now. I'll go through at a more of a business level what their blockchain looks like. So these are some graphics from their white paper, and you could get their white paper on the web. It's publicly available. You'll see that these are similar graphics that you'll find in terms of Merkle trees and validation and nodes in other white papers from other blockchains. And here we show some examples. In plain English, really what the governance, the Libra, trying to do is they have the ultimate right to assert any authority provided in this association. So thus the governance of the Libra ecosystem evolves as the validator sets change. So you have those initial founding members that we discussed, and then that will be based off of proof of stake. So this is a proof of stake based ecosystem. And for those that aren't familiar, there's two overall viewpoints on blockchain. There's proof of work and proof of stake. In a proof of work, such as Bitcoin and the V1 of Ethereum, the algorithms actually reward participants who solve cryptographic puzzles in order to validate the transactions and create new blocks. So this is what we would call mining. In a proof of stake, though, such as Casper implementation that some Ethereum developers are working on, there's actually a set of validators that take turns proposing and voting on the next block. And the weight of each vote depends on the size of its deposit, so the stake. So as Facebook has tried to point out, there would be essentially a 1% or so stake within this ecosystem. Many have pointed out that there are some advantages of a proof of stake, such as security, and Facebook talks a lot about that in their white papers, but also energy efficiency. As many of you know, it's very costly sometimes and takes up a lot of computing power to run these networks. But Facebook ultimately believes that they'll be able to meet the demand of 1,000 transactions per second. So to put that into perspective, it's approximately 50% of the capacity that Visa is able to do on average per day. And also there are some Ethereum, what they call plasma implementations, which are side chains that purport to do about the same. So it's about 50% of that capacity. And that's what Facebook has put out as a goal at a very high end. So again, it remains to be seen if they'll be able to add a lot of value versus what's already being done in the blockchain space when they launch this platform. The second part, and you'll see here, this is the Argentine peso, and it was down 25% 2 days ago, another 10 or 20% over the last day or so as well, since they had some election results. What they've tried to do with this Libra coin is back it almost, if you could think of it like a money market fund. They have actual assets that they'll be holding, and all of the members of the foundation will be holding, that they're calling low volatility assets. So I would assume not the Argentine peso, but you never know. And that would include bank deposits and government securities and currencies from what they call reputable central banks. And as they say, the value of Libra will be linked to this basket of fiat currencies. There will be fluctuations in the value of Libra. So just because it's a stable coin and it's supposed to track one-to-one, remember that these currencies in and of themselves, for instance, the peso here, they go up and down. There's inflation, there's deflation, there's printing by central banks. And as many of you probably remember, in 2008, there were money market funds that broke the buck, as they say. So their net asset value was actually less than one-to-one for many reasons that are too complicated to go over on this webinar. But the point being that Facebook has tried to make the case that, from their users' perspective, there shouldn't be too much fluctuation. They've also looked at, preventing things like an economic crisis by only investing in debt from what they call stable governments with low default probability. They haven't really defined a lot of this yet, but you would assume this would be US, European types of short-term debt. And they've relied on short-dated securities issued by these governments. And what they say is these have very high trading volumes and they have very low risk of default. This would allow the size of the reserve to be easily adjusted as the number of Libra in circulation expands or contracts. So this is a big difference between Libra and other pre-mined currencies, such as Ethereum, or we'll talk about the hydro currency that Hydrogen was one of the co-creators of, in terms of inflation and the ability of centralized actors, in this case up to 100 people in the foundation, to control the supply and the inflation of the currency. The third piece that they've built is what they call Move. And here you can see, like a U-Haul moving van, they've created what they call a new programming language for smart contracts on the Libra blockchain. Because they say they want to serve billions of people, they've tried to create a new programming language I would say is probably going to look more like a low code type of platform, and they'll be targeting most likely more product managers and business people with this particular implementation. They say there's a lot of security incidents, in their own words, that have occurred in things like Solidity on Ethereum, but they haven't really put out too much information yet on what benefits their particular Move language would provide, or what front end they'll provide in some other resources to developers. So this is very much TBD. Some of the things they have said they'll do on a more technical side is Move is designed to prevent assets from being cloned. What they call this is enabling resource types that are constraining digital assets to the same properties as physical assets. They also say it facilitates automatic proofs that transactions satisfy certain properties. So things such as payment transactions, and only changing the account balances of the payer and the receiver in those transactions. So those are some of the more technical details they've actually put out for the Move platform. Another thing that they've done is they've started to leak out some photos, and here's some graphics of mock-ups of their wallet. They've actually created another subsidiary called CALIBRA, C-A-Libra. This is a regulated subsidiary, and the platform here is meant to separate what they say the social and financial data. And again, going back to some of the questions the lawmakers have is how are they going to do that? And to build and operate services of the Libra network. So here, for example, they'll be creating a wallet as one of those services. This will look very similar to wallets that you might have seen on the Ethereum or Bitcoin network. So after that 10-minute background on Libra, this brings up an important question that I want to discuss, and maybe we'll have time in the Q&A for, is has Facebook just created a crypto equivalent of what I call FRANKENCAR? And for those that aren't familiar, on the left side, this is actually a Craigslist post. Someone was ingenious enough to put together 28 different parts from 28 different cars. And that car went for $25,000. The one in the middle is from Cuba. And because of the embargo, they have a very hard time getting parts. And the third one's, if you've been to Manila, you've seen these jeepneys that they have, which are basically old US Jeeps that are left over that they've turned into FRANKENCARs. So essentially, Libra and Facebook has done pretty much the same thing. They've taken bits and pieces of private blockchain, public blockchain, what startups have done, what enterprises have done, and also government implementations. And they've tried to mash them together and make everyone happy, at least in the marketing materials they put out. So for instance, it's decentralized, but not at the beginning. It also has a foundation, but only 100 members, which seems rather arbitrary. It has a new smart contract language. It also has a stable coin, but it's not really meant as an investment. It has a proof of stake chain, but also, if you look at their white paper, they talk a lot about consensus algorithms and proof of work. So really the biggest question for me is, why did Facebook have to take this project on in the first place? At its core, this is essentially a private blockchain, or a new private network that they're creating, which there's nothing wrong with that. There's plenty of those in the market. But it really begs the question, why is Facebook, if they say they're only controlling 1% of it, why are they taking the lead? Square, PayPal, or some other companies could have easily been the lead developer here, and there'd been much less controversy if they would have done it. So it really doesn't make a whole lot of sense to me. And I'm one of the people that's anticipating what this platform will actually look like when it's out in the market. So if we take an example of how Libra looks versus Hydrogen, I'll talk a little bit about our platform for 2 or 3 minutes, and then we'll have about 5 to 10 minutes for questions. So we've built a platform called Molecule. Molecule is built on the Ethereum blockchain. So as I mentioned, instead of having 30 nodes or people who control the chain, we're one of 7,800 on Ethereum, and that could be hundreds of thousands at some point. We've built this platform on top of Ethereum, which is open source. We've also built our own protocols on top of Ethereum for things like payments and remittances and identity. Those are also open source. And the Molecule platform will be live in the fourth quarter, and you could currently sign up for it. So instead of paying $10 to $20 million to Facebook and Libra to join, you actually can join our platform for free with free sandbox. We'll have free UI and open source UX libraries. We'll have APIs and different components and integrations that you can use. So here I'll give you two examples. So here's one example that would be similar to what Facebook is trying to do when they launched in 2020. Because Molecule is built on the Ethereum blockchain, you can do things like international remittances and payments while cutting out what's called correspondence banking. And for those that aren't familiar, this causes a lot of problems now because let's say I want to send $100, in this case, to someone in Mexico. If you wanted to launch a investing app and you wanted someone in Mexico to invest in the US or vice versa to buy a security, how are they going to do that? Payments can happen on the weekends. There's a cutoff time, usually at 4 p.m. or 5 p.m. to make payments in most countries. And then there's these correspondent banks that take all kinds of fees and causes delays in sending the payments. So what we will allow to do through APIs is you don't have to interact any time with smart contracts or something like the Move platform. You could just hit an API, and it would swap the currencies on the Ethereum chain. And then the end user would get Mexican pesos at the current exchange rate. So very simple, and this is virtually free and virtually instantaneous. The second example would be something like tokenization. Here we have an example of a platform that you could build on Molecule for tokenization. It's not clear yet in terms of tokenizing assets on the Libra blockchain, but this is an inherent part of the Ethereum blockchain, is being able to tokenize. And we've created some really cool tools and modules to be able to do that quickly. So tokenizing assets, in this case, a portfolio, you could see this is gold holdings, it's oil holdings, mutual funds, ETFs. These would be integrated to back offices and KYC providers. And here you can see we have some UI that you could use out of the box to actually allow clients to invest in these tokenized assets. So all of this happens at a business layer that we built on Molecule, where you don't need to know anything about smart contracts. And this is virtually free to run because it's run on our SaaS. And again, we're, remember, a node on the Ethereum blockchain, and we're sharing that cost with those other 8,000 people versus on something like Libra, you're sharing it with up to 100. So it's much more costly. So hopefully that was informative for everyone. I see that there's a few questions, which I'm going to take now. If you have any more, please feel free to punch them in. We have a good 5 to 10 minutes here to answer them. But I appreciate everyone joining. So let me take a look at the questions. So the first question is Facebook building their own wallet? And is CALIBRA being regulated by which governing body? That's a good question. So if we go back to here, this is the wallet that I was talking about. And this is the CALIBRA, which is, they say, going to be a regulated organization. So I would assume that they would get things like money transmission licenses. And I believe they've done some business development now with, for instance, Gemini and some other exchanges and some other wallet providers to be able to make these integrations happen. So this will be their own proprietary wallet. It remains to be seen. Again, they've talked a lot about open sourcing this platform. Some parts are open source, but then you have to be a member of the foundation to control some of the currency. So we'll have to see if the wallet will be open source, if the smart contracting library would allow any developer to build, and then how that would interact, and if they would try to compete, in fact, with some of the developers on the platform. So that's a great question. And we'll take a close look at that once that wallet is out on the market, and once CALIBRA starts building some other implementations. Second question is, who do you see as the biggest competitor for Libra, or is there someone they will disrupt? So that's a great question. So I think for sure this is going to be troubling for some of the private and more permission blockchain providers. And those are platforms like R3 and digital assets, also like IBM Fabric, and other firms building on Hyperledger, and Ripple as well. And we've seen a lot of interest from Ripple and a lot of lobbying up on the Hill from firms here, because this is very competitive to what they're doing. If Libra and Facebook is able to execute on this smart contract platform, which I find the most interesting, the move part of their implementation, and also if they're able to get adoption of the currency on things like WhatsApp and the Facebook platforms, I could really foresee them creating enough momentum to be the go-to player in this market. And for me, this market would be more in the private and permission blockchain space. And that would represent a really strong alternative, I think, to enterprises that want something lower cost and more decentralized, like the Molecule platform, or if you wanted to build on Bitcoin. So I do believe within 3 to 5 years, there will be clear choices that businesses will have. Do you want to build on something that's more permissioned, more costly, you have more control over? Or do you want something that's faster and lighter and you get to market much quicker and it's more decentralized? And there's pros and cons to both. And there won't be one player in the business blockchain space that wins, I don't believe. Next question we have, do you think Libra is decentralized finance? This is a great question. I think I saw a recent meme that was yes, but actually no, if any of you have seen that. So, according to their white paper and their website, they've talked about opening up this Libra association. They've also talked about open sourcing a lot of the platform. But once you see the names on there, and those are all Fortune 500, and many of them are Fortune 100 as well. There's also VCs, there's startups on there that have a lot of backing. So the question really is, will this platform ever move from being more permission to permissionless? So right now they're kind of in between. When they start, they'll definitely not be decentralized finance, but if they're able to keep their promise, they could down the line. And it's really hard to say, if there would be any momentum and pushback from users once they start using the currency to make them decentralized. So that's something really interesting to point out. It's also important to point out that there's no code in Bitcoin or Ethereum that makes it decentralized. Really, the only thing that makes it decentralized is that stakeholders can run any version of the code without any repercussions. Okay, a few more questions here. So I mentioned 100 nodes on Libra versus 700 to 800 on Ethereum. Is there a critical number that indicates decentralization, if decentralization is a goal? Another great question there. I don't know if it's a critical number, but you definitely, for instance, if you look at hydrogen, we have one of 7,800. I would actually love for that 7,800 to be 78,000 or 780,000. And it's just exponentially more. There's a huge difference. It's almost 80 times more members running nodes than something like Libra. And that's at full capacity of Libra. Right now, there's only 30. So you're talking about over like 200 times more decentralized. So I don't think that there's any critical number, but obviously the larger the number, in my belief, the better if you're looking for decentralization. And most of the companies that have launched these blockchains, that's been a big decision point they have is, do they want it to be decentralized? You really can't have it both ways. And that's kind of how if you're reading in between the lines of this Libra, and why I call it a Franken crypto, they're trying to kind of do both at the same time. Another question is, can Hydro work with the music industry? So things like smart contracts, Hyperledger, Quantum Ledger, etc. So the Molecule platform that Hydrogen has created is industry agnostic. So we could work in music, in telecom, governments, banking, insurance. Really what we're trying to do is add financial components. So if you wanted to do payments in that music platform that you're building, or if you wanted to do something with invoicing or tokenization of assets, you want to tokenize some of the IP that you've created on chain from the music, then you could use our platform very easily to do that. So we're industry agnostic. We're just focused on helping businesses to add financial components. Something also interesting to note in the last minute that we have here is this Molecule platform integrates with our Atom platform. For those of you who aren't familiar, Atom's our traditional library, and you could build all kinds of financial apps and platforms with that library. So things like investing apps, insurance, wellness, and banking. And there's over 30 different kinds of parts of those platforms that you could build. So different kinds of investing apps and insurance apps. And then Molecule integrates directly in there as well. And then the last question I'll be able to take, because I'm cognizant of everyone's time, is the fee confirmed at 4.69% for any transaction? Why so high? I assume this question is about the transaction fees on the Libra blockchain. So again, if you're cost sharing among 30 people instead of thousands, there's going to be a lot more costs to be able to do these platforms and transactions. It's one of the big impediments that most of the private blockchains have had to get to market. It costs millions and millions and millions of dollars to even get started there. You also have to find other members and other nodes. So let's say you wanted to launch a logistics platform and you're a big box retailer, you would need 10 other companies to join you at the exact same time, and then you'd all have to share in the costs of running those platforms. So it's just exponentially higher to do that. The transaction costs in something like Ethereum or Bitcoin are in the pennies. They're also not a percentage, and that's something important to remember. If you're sending $1 billion in Ethereum, it should be the same cost as sending $1. It doesn't really scale. It scales with the amount of work, and as we talked about the proof of work, the amount of work that it takes to mine those transactions versus the dollar amount. So that's why these are really good for large payments that businesses are able to do. It's really not a percentage transaction on top of that. Okay, so that's all the questions I have time for. I really appreciate everyone joining. We had really good participation. Again, we're really psyched about Libra joining the market, because this is just an excellent opportunity to educate more businesses about the power of blockchain, decentralized finance, and really show them the difference between some of these platforms. And as I said, there's really not going to be a clear winner, and we're welcoming more competition into the market. If you're interested in trying out Molecule, we have a private beta going on. You can actually sign up directly on our site or send us an email at partner@hydrogenplatform.com. And please contact me directly as well. If you have any questions, I'm easy to get a hold of on LinkedIn or email or Twitter, etc. Everyone have a great day. Thanks so much.